So we're going to dive in right away. And I want each of you to help the people that are listening to us understand what are the key steps a client should take before applying for a mortgage in each of your areas of expertise.
You want to take the lead on the commercial side?
Sure, I'll take. So I would say the first step would be to literally jump on a call to understand what is it that they want to buy. Is it a multifamily? Is it an industrial building? Is it office space? So because every type of asset is different in terms of financing.
Mm-hmm.
And then what kind of structure is it that they want to purchase in? Is it going to be in a corporation? Is it going to be in a holding company, operating company, a trust, a partnership? Is it going to be under a personal name? So it's really understanding the purchase and understanding the project of what they want to do. The first steps.
And that's very important, because when people approach me to help them as a real estate agent, the first thing they're going to tell me is, how much can I afford? What can I? And I always say, wait. Let's first do an onboard call with the mortgage brokers, because they're going to help you understand better. It's not just about how much can I get, right? Cosimo.
Right. No, that's exactly it. I think that on the residential side, what's important is that clients actually prepare and establish a budget, a monthly budget that they're capable or willing to pay. I think that's more important than being driven on how much can I buy, just because it really goes according to their lifestyle. It goes according to, what are they paying now, if they're renting, or if they bought already, like what is comfortable for them to pay. And I think that often that's one of the first conversations that I have with clients, and it surprises them, because they're like, oh, okay, you know what, maybe instead of purchasing a property for $1 million, maybe, we'll be a bit more reserved and purchase something for a bit smaller that's going to fit our needs. So I think that's the first step that clients should take.
And in each of your areas of expertise, I'm going to start with Cosimo. How do lenders evaluate whether a borrower qualifies or not for a mortgage? Because I get a lot that question, and I always say, look, the expert is the mortgage broker, but what is that you evaluate? Is it only how much the person is making? And then I'm going to ask Mauro, or is it also the debts? What is that you evaluate?
It's really both, so the income is like super important, as well as the overall debt that the clients have. I mean, there's a ratio that lenders have that we can go over, and it's really based off, okay, how much do they make? Like how much does the household make versus how much total debt that the clients have, and if they can afford that mortgage payment.
And if I understand correctly, there's two ratios, right? There's a ratio that you have to respect in terms of the cost of the property, and then there's a total debt ratio.
Yeah, the total debt one is the one that includes all the debts. Okay. So in both cases, there's a separate ratio that they can go over.
Okay.
And it's very important to fit in within those ratios, all depending on the client and how stable they are in terms of job stability, in terms of like I said before, overall debt. So that's really important.
Does the ratio change according to the lending institution or no?
It depends on insured deals. No. So basically insured deals, any deal that clients put less than 20%. On deals that clients put 20% or more, it can. But then, it's specific programs that some lenders do. And, it also involves maybe like the type of property that they're financing. Is it a rental property? So we go into more of the technical things. But that's the beauty of having like different lenders, right? Because we have that flexibility as opposed to being stuck with just one lender.
And before I go to Mauro, this is something that I always insist to all of my clients. And this is an advice I always give them, and is probably the worst place you can look for a mortgage is directly with your bank. And in my opinion, it's because whoever does the mortgage at the bank is doing bank accounts, is doing a whole bunch of other things, and it's not an expert. When you go to mortgage brokers, they can choose between a whole portfolio of lenders, and they can not only get you a better rate, but, and Cosimo did that for me, he was able to get more money out of a refinance I did than the bank directly. Because with my how am I gonna say, my profile, he was able to go look for a better lender than my bank directly. So that's why I always say it's better to work with a mortgage broker. In the residential area, it doesn't cost you anything. In the commercial, it does cost you, but it's worth the difference. And so now for Mauro, when it comes to commercial, what is that the lenders evaluate for a mortgage, for a borrower to qualify for a mortgage?
So for on the commercial side, it's really asset-based financing. So it all depends on the type of asset it is. And there's two. Let's say if we look at it, could be potentially an owner-occupied asset where a manufacturing business is going to be occupying an industrial space. That kind of financing is based on the financials of that company.
Okay.
So it's based on EBITDA. Then if it's as an investment, it's based on the revenues of the building, based on the net operating income of that building and what it could sustain in terms of payments.
Okay.
So it's really not, it's really different compared to the residential side. The residential, they look at your personal income, they look at your personal debts, they look at the ratios, and that has to be respected. However, on the commercial side, it's really the building itself. They consider it as almost a business on its own and say, how much can this building support as a payment? How much, and they convert that payment into a mortgage.
Mauro, I have a lot of clients that have businesses, and I had especially a client that she is a lawyer, and the bank told her that she was able to get 100% financing, and you have discussed with me that same thing. Is that true? And when does that happen?
Correct. So that is possible. You could buy, again, it has to be for an owner-occupied property.
Okay.
So let's say, again, for your client that's a lawyer, it has to be for her law firm to occupy the space of that building. When it comes down to it, it depends on, certain lenders have different criterias of how much square footage needs to be occupied by the firm. But it's anywhere between 30 to 50% of the square footage of the building. Minimum has to be for that business, and then yes, you could get up to 100%. You could even get up to 120%. Because you could add leasehold improvements. Right? So let's say if the purchase is $1 million, and the company could support that $1 million, well, then you need to create subdivisions and walls and electrical and plumbing, and all that can be financed as well.
Okay, guys, because I know probably people are gonna ask, when is a mortgage considered changes from residential to commercial? Is it because of the type of property they're buying? Is it because of the amount of doors that the client has? What's the difference? When do we change from residential to commercial?
So it depends. So obviously, as the asset class, let's say if we're looking at 100% residential, depends the lenders, but it could be as of 5 units. Some lenders above 4 units is considered commercial. We have some lenders on the residential that could go up to 8 as a residential mortgage. But usually, rule of thumb is 5 and above is considered commercial.
Okay.
On multifamily. But if you look at semi-commercial with, let's say, a small local on the bottom and 2-3 apartments upstairs, that would be considered commercial property.
Commercial.
Yeah.
Now, in terms of documents, because people always ask also, for residential and commercial, what are the types of documents that a buyer should have available for that application process?
Well, I think the one of the most important ones that people forget is actual ID. So it's good to have 2 pieces of ID.
2 pieces of ID.
Yeah, so let's start with that. Sometimes I get clients that are like, oh, I lost my driver's license and my Medicare. I'm like, yeah, we're going to have a problem.
Yeah.
So ID is the first thing. Then from there, anything supporting, so any document that supports your income. So like T4s, notice of assessment, pay stub. And then proof of down payment. I mean, that's really like the basic.
Yeah, and they can, and they can even go to, if you're divorced,
Yes.
they can ask you for your divorce certificate if you're paying
separation
alimony.
Exactly.
Or
Yeah.
receiving.
To be honest,
Or receiving,
Yeah,
because
or
that's
help.
income,
Could help.
right?
yeah,
Yeah.
the list could go on, right? It all depends on each individual. To be honest, I mean, not everybody is just not everybody has a street story, you know. So,
Yeah, because people sometimes are like, why are they asking me for so many documents? And my response is always, they want to really know how much you owe and how much you have.
Yeah, exactly.
And if a mortgage broker or a bank is not asking you for all of those documents, they're probably going to give you a pre-approval that's not going to be good enough.
That might have some hiccups later on,
Yeah.
right? And we want to avoid any surprises. So, I mean, I know that sometimes it seems like it's a lot of documents, but it's case by case too, right?
Yeah.
Like, I mean, if you've been divorced 3 times, well, you know, we want to make sure that you're not paying alimony to 3 different people. So, so they're going to ask the right documents for that. Exactly.
Maura, and in your case?
So on the commercial side, it's very similar to the residential. I would say not so much for T4s or letter of employment, stuff like that. It's more for tax returns, notice of assessments, financials of the company.
Yeah.
We would also need an evaluation done. That's the major difference as well. An evaluation done on the property, paid by usually the borrower, the purchaser. Potentially also an environmental phase 1 to make sure that the soil is not contaminated. That's another major difference. But apart from that, the other documentation is very similar to residential.
And now, and please, the people that are listening to us, what are the most common mistakes people make when they're looking to get a mortgage for a property? Please.
I think that I think the biggest mistake is that I mean, and I understand. I don't even know if I could call it a mistake, but a lot of clients are rate driven, which is okay, because I mean it is going to influence, you know, your monthly payment, and I could understand that. But often now more than ever, I do get clients that call me and their first question is about the rate, and I mean, we don't even know if you have good enough credit to pass, right?
Yes.
So, I mean, I can shoot you any rate, right? But at the end of the day, I have to look at everything and say, listen, you have the choice between, you know, going with this lender that offers you maybe 0.2 higher than the other lender and not getting your mortgage. Where do you want to go? You know, and I think that staying open-minded is the advice that I would give to a lot of clients going into it, and not just being driven by, like, you know, a brokerage that's like popping like this really low rate and promising it to everybody, because it's not exactly how it goes, you know. So I would say that.
And I'm gonna give an example, because I just did a refinancing with Cosimo, and he offers me a rate, and I'm like, hey, but at my bank they're offering me a little bit less. And then he does the numbers and he tells me, Kat, you're saving $200 in the difference, but with the bank, I'm getting you the financing. You're getting 1,000 cash back, so I'm actually making 800. And on top of that, he was able to get me more money out of the refinancing, and that money I'm gonna be able to invest. So, me too, I do the same mistake.
It's very common, right? It's a common mistake, and I mean, I don't call it a mistake. It's just it's
common
visual.
worry.
It's
a
a
lot
common
of people,
worry.
Yeah, they worry about the rate.
Yeah, and I mean, and sometimes you just have to take 5 minutes to crunch the numbers down, and you realize that, okay, you know, maybe the deal that I was promised isn't necessarily the best deal for me, and that's where it matters most.
Exactly. And for Mauro, what would be in the case of commercial? What would you say it's the common mistake people make?
I would say automatically assuming that the down payment's going to be 25%.
Yes, huh?
Yeah, I think it's like it's a lot of people say, oh, commercial, okay, it's 25% and that's it. It's a purchase of $1,500,000. Here's 300, whatever it is, 400,000. No, unfortunately, it's not the case. Again, it's asset based. So you could have 12 units side by side on the same street with different revenues. Both of those are going to have different loan amounts that the bank's going to be able to give. So again, it's automatically assuming it's 25% down, and also the same is very similar is the rate. Now the difference, people say, oh, what's the rate? The rates on the commercial side could only be pretty much fixed about 2-3 weeks before notarizing.
That's very important to know, yes, because
So-
everyone wants to know the rate, and that's in commercial. And I want to point out a mistake with the commercial, like you say, they assume automatically it's 25%, but if the building that you're buying doesn't support a 75%, what we call loan to value, right?
Correct.
You're gonna have to put way more money, and that's important to know, not only when you're gonna buy but when you're gonna sell, because many times I do comparative evaluations and I tell my clients, look, this is how much you can put your property for. They're like, no, but I want to put it at $500,000 more. Okay, then, and this is where normally Marudo always helps me, and is, what is the maximum amount a buyer can get, so that I can show my client, hey, yeah, you want $3 million for your property, but when I evaluate it with the mortgage broker, any buyer can only get 1.5. Do you honestly think you're gonna get a buyer with a $1.5 million cash?
Yeah, so it would be difficult.
Yeah.
And if somebody has that $1.5 million down, well, they're gonna want a deal on the property, right?
Exactly. And this is also something that I tell my clients when it comes to evaluating commercial properties, is be careful also with the broker you're dealing with the real estate broker you're dealing with, because they can tell you to get the contract that your building is worth way more, but at the end, you might stay on the market forever because you get a promise to purchase that is not going to pass financing. And before we finish, can you guys tell a little bit, the people that are listening to us, what are we looking in the market in terms of demands, policies, rates, things that have changed, things that people should keep in mind when asking for a residential and a commercial mortgage?
I'm gonna go.
Yeah, go ahead.
I think on the residential side, I think the rates are pretty stable. There was a lot of good intention in dropping them and continuing dropping them. I still think there is, and I'm hopeful that way that there is within the next couple of years. So, but they're pretty stable. I know that prices haven't necessarily dropped, so it's making qualifying for these bigger amounts a bit harder for clients, because prices haven't dropped in. Properties haven't dropped in prices, and incomes haven't necessarily followed with that big increase. I think, so that's one thing. In terms of policies, I would say, there's with everything that's happening around the world, there's a bit of uncertainty in the economy, and I think that banks are really they really check everything. They're tightening up, let's say.
Yes.
So that's why, like, when we present a file, we gotta really make sure that we look at every single angle possible, not to do any mistakes. Because not that they're necessarily gonna go look for them, but if they do see something that's wrong, they'll make it a bit harder for you.
I want to ask you a question, because a lot of people don't realize this, and it's the fact that, yes, let's say you're paying a rate of 4%, but banks don't evaluate residential mortgages based solely on being able to pay 4%. There's something called the stress test. Yes. Can you briefly explain to the people what the stress test is, and why is it good for the clients?
Yeah, it is. So what the stress test is basically, let's say Catalina applies for a mortgage and the rate that she's offered is 414. Well, the payment that we're gonna qualify her on isn't whatever payment that 414 gives us, but it's 414 plus 2%. So we're gonna qualify her on a higher payment in the event that if things go bad, that her renewal rates are higher, she can still afford her mortgage.
Yeah.
Okay, so
Yeah.
so that's really that's why sometimes, I mean, clients don't understand why they qualify for maybe a lower amount than they expected. Well, it's because we qualify you based on the possibility that if rates do go up, you'll still be able to pay your
And that's
mortgage.
probably saving a lot of people now.
It is.
Those people that bought during COVID at
Mhm.
1 point something or 2%,
Yeah.
they're probably being saved by the fact that there was a stress test
Yeah,
in place,
they're,
right?
they're being saved. I mean, they're not happy,
Yeah.
right? Because the rates are a lot
Yeah.
a lot
The
higher.
actual payments
Yeah.
are higher.
Yeah, their payments are higher, so they're not happy about it. But towards the eyes of the financial institutions, they're like, well, we prepared you for this.
Yeah,
We qualified
exactly.
you based on this.
Mhm.
I think that's the most important part.
Yeah. And Mauro, same question for you in terms
I
of
would say-
commercial lending.
I would say for on the commercial side, the rates have been slightly increasing since I think since February, the whole or January, February, the whole trade wars and all that stuff. The bond markets really dropped quite substantially, and since then they've come up. But it seems like the market for multifamily is still very, very strong. I still have a lot of clients that are calling for multifamily residential buildings for financing. I would say a bit less on the industrial space, and office space is back actually. So
Is it?
Yeah. So some lenders are a bit more open to office space than they are industrial space actually, because I guess of all the back to office work plus these trade wars with for manufacturing is not that great for us. So that's why in the industrial they'll tend to maybe be a bit more resistant to giving easier approvals.
Yeah. Okay.
Yeah.
Before we finish, what is a piece of advice you would give to somebody that's looking to buy a residential property and to buy a commercial property? The biggest piece of advice you can give them, doesn't matter if it's, doesn't matter what type it is, taking into account everything that's happening in terms of rates, prices, everything. What would be that piece of advice you would like to give people?
Call me. Llámame.
Yeah. I'm gonna give if anyone is looking for good mortgage brokers, and I can attest because I have not only referred them a lot of clients, but I have personally used them. Send me a DM and I'll provide the information of Cosimo and Mauro. But any other piece of advice?
I would say.
Yeah, no, you go. No. I mean, I did my piece of advice. You can start with yours.
So for those that are starting to invest in real estate, the earlier the better. Really, it's today. I many clients of mine. It's always, and then he has 100 doors or 200 doors or 300 doors, and it's like, how did you start and how did you find the deals? And he's like, today's price is going to be tomorrow's deal, and that's what it is.
Exactly. So that answers that question that I always get from every client. Should I wait? Should people wait?
No,
No, I don't think so.
buy and wait.
Yeah, buy and wait. Yeah.
Exactly. Buy and wait.
Buy and wait.
Well, thank you guys. You've been very generous to come here to the studio, to Laval at 7:30 p.m. And on top of that, I was late. So if anyone has questions, anyone that's on the live, I'm going to post this live on Instagram. If you have questions, you can write them on the wall or you can send them to me by DM and I can ask Mauro and Cosimo to answer. If you're looking for good mortgage brokers, send me a DM. I'm going to send you their contact information. And once again, I want to thank you so much.
Thank you.
Thank you.